Monday morning, folks. Welcome to this episode where we break down the technical outlook for US spot gold. The markets were extremely volatile in favor of gold last week. Everyone's interested to know where markets are heading out for this week. Let's quickly look into the charts. This is the daily chart for US spot gold. On Friday, we saw gold close around 34.32 levels, which is matching the highs that it had hit previously earlier in the month of May. We are yet to see whether gold forms a double top pattern right over here where it's unable to break around this level, or it's able to brace past this level and continue to hit the next highs, right? So the first level it has to break is this 34.44 resistance, which is again, like I said, on the 6th May high. The second level that gold has to break is 35.06, which corresponds to the all-time high that we've hit in gold, which is 3,500 as of 22nd of April, right? This is the level that everyone's going to watch out for when they're going to inspect how far gold is going to break from its current levels. And from a long-term perspective, if we expand the Fibonacci retracement that I have seen here and see what the different levels look like, we see that there's a 127.2% level here, which corresponds to 3,600, which is the next resistance. So 3,500 for this week. And if 3,500 is broken, which looks very likely this week, we are going to see a move up to 3,600, depending on how geopolitical situation shapes up. Quickly on the downside, if you have to see signs of changing momentum in gold, the 33.56 pivot is the first level to watch out for. A break below this level would indicate that there is shifting momentum. This level, this level might be broken only and only if we see severe de-escalation in the current war that's happening, maybe with US stepping in. We don't know, but this is something that is yet to be seen. Below 33.56, the first major support that we have is at 32.66, followed by 32.12. So both the supports are in 3,200 region, whereas gold is currently trading around the 3,400 region. If you observe the RSIs on the daily chart over here, once again, you see that there is sufficient room for an upside, right? RSIs are currently at 60, 62 levels. This means that they are firmly in bullish territory based on the recent past. And they're not in overbought territory yet, which means there's sufficient room for the metal to move towards the upside. If we see more escalations in the war between Iran and Israel, technically there is full support for the metal to extend from its current highs without even reaching overbought territory. From a data standpoint, there are two key data points to watch out for this week. One is the retail sales indicator month over month, which has been quite volatile, as you can see from this graph right here. There have the previous reading was around 0.1%, but we're expecting a decline of minus 0.2%. So this is going to be watched out for to gauge the health of the US economy. But more importantly, this week, we're going to be seeing the Fed interest rate decision and the economic projections that the Fed is going to set out for the remainder of the year and for the following years as well. If we understand Fed's current sentiment right now, it is the following. Fed officials have assessed that the announced tariff increases had been significantly larger and more extensive than anticipated, and noted considerable uncertainty surrounding the direction of trade policy and the magnitude, scope, timing, and duration of its economic effects. Minutes from the May FOMC meeting showed. So this clearly tells you that the Fed did not expect the size of the tariffs imposed by President Trump to be as major as they were. And as a result of that, it's very likely we're going to see a slightly hawkish outlook from the Fed. They're not going to be as encouraging to lower interest rate cuts. They might want to be on the defensive. We're going to continue to see how the Fed Watch tool evolves. This gives us a probability of an interest rate cut per for every FOMC meeting, right? The meeting that we have this week, it is very clear the Fed is going to keep its interest rates same, which is in the 4.25 to 450 basis point range, right? In the July meeting as well, we see that there's a 77% chance interest rates are going to remain the same. There's not going to be any cut. But in the September meeting, where we're expecting there's a greater chance of an interest rate cut, so around 57%, based on how the Fed is currently looking at the economic scenario shape up. So this is something that we're going to try and decipher from the Fed speak this week. Is September going to be the first month where we're going to have a rate cut? That completes a roundup of the US spot gold analysis, both from a technical and fundamental standpoint. If you have any questions for me, please pin them in the comments and I'll reply to you. Thank you so much and goodbye.